Nvidia's Q3 earnings were amongst the best earnings results I have ever seen a public company ever present. I want to go through the earnings today, just do a very quick video of my thoughts and feelings about the largest company that I hold in my portfolio. First up, whenever we take a look at the overall growth rate of this business, even at $57 billion, which is one of the top companies that is producing revenue, they're still growing at over 60% growth rates, faster than last quarter at 62.5%. This is not just fueled by data center. However, it's 99% growth is in data center. They also found growth in gaming, in professional visualization, and automotive, also leading to better results just overall. As time goes on and self-driving becomes more and more relevant, obviously automotive will pick up and start to become a multi-billion-dollar product for them. But for now, data centers is still going to remain a 90+% product for their entire revenue base. Now, this was a comment from Jensen Huang. Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference, each growing exponentially. We've entered the virtuous cycle of artificial intelligence. The AI ecosystem is scaling fast with more new foundation model makers, more AI startups, and more new industries in more countries. AI is going everywhere, doing everything all at once. It's pretty hefty. Even in the top few companies, I'm looking at Amazon, Microsoft, Google, Meta, Oracle, and now CoreWeave, which is actually starting to pick up, now doing over $3 billion in property and equipment. For capital expenditures, they are now at over $109 billion a quarter just across these 6 companies. That is truly spectacular. And from all of these companies' comments of their Q3 earnings is that this is going to accelerate into 2026. So no real slowdown from Jensen Huang. And as we know, and we're going to talk about this in a second, they're talking about potentially getting to over $500 billion in data center revenue over the course of the next year. Now, probably the most surprising thing is just the level at which they've been able to keep these gross margins. As we know, Taiwan Semi continues to increase their margins and passing that on to Nvidia. That's been scaring some investors, worried that gross margin is going to collapse as cost of goods increase, but that's really not what we're seeing. Quarter over quarter, we saw an increase in their total gross margin back to a very healthy 73.4%, leading to nearly $42 billion in gross profit. This is a compounded annual growth rate right now over this time frame of 69.8%, or roughly 70% compounded annual growth rate on gross margin. Just insane. Now, flowing down to operating expenses, which continues to grow to match the size of the overall business of Nvidia, we also see that this slowing of growth. We're seeing compounded annual growth rates of only 34% for research and development and 22% for sales in general and administrative. This, as a percentage of revenue, has only fallen, now down to a combined total of around 10% of all outstanding revenue. This is leading net income to be at a very high 56% net income margin, which just allows them to bring on $32 billion. $32 billion of income this quarter. That's bigger than most of the companies that we cover on this channel, let alone quarter over quarter, that growing from 19.3 billion to 31.9 billion. Just absolutely crazy. So we have growth expansion, we have margin expansion in a very fast total addressable market. Now, into some of the more nitty gritties, which I also just like to cover as well. This is not fueled by growth at all costs or somehow the CEO is profiting off of their shareholders. What we actually see is buybacks being much stronger than their amount of new issued shares for stock-based compensation. We end up seeing what is net issuance at negative $12 billion whenever you factor in the amount of new shares that they're issuing versus the amount that they're buying back. If we take a look at the total outstanding share count of Nvidia over the last little bit, it has continued to fall as they've purchased more shares back each and every quarter. This improves EPS and makes that the share of the company that you hold today be worth more into the future if there's less outstanding shares going forward. Speaking of stock-based compensation, a lot of companies at this size and scale, especially ones that are growing at 60+% rates, have stock-based compensation somewhere in the line of maybe 6 to 8% of revenue. Nvidia, 2.9%, only $1.65 billion to fuel all of their engineers' needs and growth, which is about 62.5% growth. Unreal. Now, whenever we look at free cash flow, which cannot be manipulated, this is the ultimate number that we can take a look at. They're at a 38.8% margin, or $22 billion. If we were to annualize that out, that's $88 billion without growth that they are bringing in free cash flow. If you were to tell me all of these statistics growing at the speed in which they're growing, you would say, okay, well, they are going to be priced at the most expensive name in the Mag 7, probably one of the most expensive names in the market. Similarly to the way that Palantir is being valued at a very high valuation because they have very little competition, growing quickly, and have strong margins. But that's not what we're seeing. Just amongst these 6 large tech names, Nvidia is ranked in the forward PE basis at the second lowest ranking at only 26 times, a little lower than 26 times, 25.7 times. It's just absolutely incredible the disrespect that is happening on Nvidia shares, even though they're putting up these great growth rates. But we have outlook, and this is looking a little bit forward. So even past the 500 billion that we talked about for the next 5 quarters, we're just going to talk about Q4 really quickly. Revenue is expected to be at 65 billion, plus or minus 2%. And GAAP and non-GAAP margins are expected to be between 74.8% and 75%, respectively. Well, first up, net revenue at 65 billion is a re-acceleration, not just from the quarter that we saw in Q2, but an acceleration from Q3, back up to 65%, and an unbelievable bar that we end up seeing here. I mean, this is just incredible. How long can they keep up this growth? It's just phenomenal. Whenever we look at gross margin, that is also expanding, bringing us to $58.6 billion based on their revenue that they set and the margins that they're saying they're going to bring in. That's $48.7 billion. Now, flowing that all into net income, we know that they are expecting about a $500 million other expense charge, as well as a 17% tax rate. What that puts us at is a very stunning 56% net income margin, or about $36.5 billion for next quarter. This is just incredible growth, going from 22 billion to 36.5 billion year over year. Let's take a moment to think about what they're even going to do with all of this money. Buy back more shares, increase dividends perhaps, maybe go out and buy some more equity in the businesses that they know are going to do well. OpenAI, Anthropic, CoreWeave, Nebius, there's a ton of names that they could strengthen a venture arm with by going out and offering them this cash in return for equity. And they know that that equity is going to do well because the chips that they are designing is exactly how those companies are making themselves best in their business. Nvidia is a kingmaker right now. Their products decide who is winning and who is not. And they get to bet on those companies and give those companies more of their next generation chips and then tell them how to set them up properly to get the best performance per watt. Now, this is very important as well, and why I continue to believe in Nvidia is just because the cost to actually generate a token, if energy is going to be the bottleneck, which is what people are saying in artificial intelligence, Nvidia is going to continue to lead, because if you're only set at a certain amount of energy, then you need to maximize that performance, and you're willing to pay any cost in order to get the most for the amount of energy that you have. And of course, I didn't forget, obviously, Nvidia's CEO Jensen Huang did say we're going to see $500 billion over the next 6 quarters. But like we just said, we just saw one of those quarters. So they're still very much on track. And Jensen Huang just recently came out and said the new deals with Anthropic, the new deals with AWS are not even factored into this growth rate. The new Saudi deal with XAI, not even factored in. That's all on top of this $500 billion over the next few quarters. And this is, by the way, all without China revenue. They're factoring in $0. And Jensen Huang had something to say about this as well.
At the moment, we are 100% out of China. And so China is 0% of, we went from 95% market share to 0%. And so I can't imagine any policymaker thinking that that's a good idea. That whatever policy we implemented caused America to lose one of the largest markets in the world to 0%. But anyhow, in all of our forecasts, if there are any shareholders out there, all of our forecasts, we're assuming zero for China. If anything happens in China, which I hope it will, it'll be a bonus. But it's a large market. China is the second largest computer market in the world. It is a vibrant ecosystem. I think it's a mistake for the United States to not participate.
The second largest market, they're not even factoring into their growth. Well, it doesn't look like there's going to be much progress there until today. President Trump is considering selling Nvidia's H200 chips, which is more powerful than the H20s. If approved, this would mark a major shift in the export controls and trade relationships with China. This is the potential catalyst that could explode Nvidia's stock even higher, opening up to an additional $50 billion annual market that's growing at 50% year over year. Like Jensen said, they're the second biggest market, and this could be unbelievable if this catalyst ends up opening. We will end up seeing. I mean, I'm not going to make any predictions. Currently, the outlook is factoring in $0, so it's only a plus if this happens. Now, I'm not going to stay too long on this, but the bears were wrong. I mean, the stock is saying one thing, but the truth is that the bears that came out and said that the depreciation and useful life of these chips was just completely wrong. Jensen Huang ended up saying, thanks to CUDA, the A100 GPUs that we shipped 6 years ago are still running at full utilization today, powered by vastly improved software stacks. Those customers are still getting a useful life out of those old chips. Now, are they getting the same margin, the same benefit that they would from the Hopper platform or the Blackwell architecture? Absolutely not. And if they could buy, some additional Blackwells, which we saw at the beginning are completely sold out, then they obviously wouldn't run these A100s. But because they need every bit of capacity possible, it's still important to run the old chips just to get something out of them rather than, waiting on a wait list to get Blackwells or even Hoppers at that case. There was also some additional concern around inventory and how much that has spiked up, but that was cleared right in the press release and perfectly normal. Inventory was 19.8 billion, up from 15 billion sequentially, and total supply-related commitments were 50.3 billion. We are ordering to secure long lead time components, meet the demand for Blackwell, and support future architect ramps like Vera Rubin, for example. So, ladies and gentlemen, there is no bear case, or at least not a real one for Nvidia just yet. Maybe someday growth will slow down, margins will be hit by stronger competition, but that day has not come. And even if it does, they're still priced at one of the cheapest, the second cheapest Mag 7 name, growing at essentially 3 times their peers in the Mag 7. So this name is unbelievable. I've never seen anything like it. And the disrespect, the disbelief that Jensen can pull it off is extremely strong here. And I think that that's alpha for my portfolio. So I'm going to continue to bet on Jensen Huang and Nvidia, ticker symbol NVDA. Ladies and gentlemen, if you like this sort of content, make sure you guys hit the subscribe button. That's all I ask of you. Until tomorrow, bye for now.